are here. You're here at the Naked Forex webinar, and I just want to make sure that my microphone is on, that you can hear me okay. All good. Thanks, Adinda. Hey, Trend Trader. Welcome, Alexander. Cool. It's great to see everybody here. More people are piling in by the minute. Excellent. Okay, cool. So today, so I'll just give you a quick background. Hey, Pep. Great to see you here. Ebear, Tim, Robert. Good day, A. Joe, Ubaid. You can't hear. Ubaid, you might have to log out and log back in. Yeah. Good day, everybody. Okay, Shazad is here. Anusha, Manoj, welcome, Manoj. Christian, great to see you. Kali, Viswanath, Renee, welcome. Simon, Carlos, Trend Trader, Edward, Shans, Addie, Sandy, Tom, Samir. Hey guys, thanks so much for spending time here today. Ebear and Robert, Tim and Anusha, Evegni and Darius. So essentially, it doesn't look like your headphones are plugged in, Ubaid. I'm not sure. Maybe Adinda or someone can help you. Darius and Ubaid both have no headphones. Anyway, so what we're going to talk about today is how to find those sweet spots on the chart. And I'm going to give you a checklist of things to look for, and also some things that some people aren't quite aware of when they are looking for those sweet spots on the chart. So those of you who have never been to this webinar, or this is your first time watching the recording, welcome to those of you watching the recording. My name is Walter Peters, and I use a naked trading system, or systems, I suppose you should say. And I wrote the book called Naked Forex, and I trade from down here in Australia, which means it's evening down here, and I know most of you are in Europe, so it's in the middle or morning time, really, basically over there. So this is what we're going to talk about. We're going to talk about how to find those sweet spots. Now, I actually it doesn't really matter to me which chart we use, but I'm going to go through the 3 important things when looking for these sweet spots on the chart. You really need to have all of the elements and a firm understanding of all of them. Otherwise, you run into problems. And I'll explain where these problems pop up for traders as we go through the checklist. So what I would like now for you to do, and I know there's a little bit of a delay, so it'll take a bit of time for people to type in your answers. But if you have a specific chart you would like to look at, I would love for you to type that in now, and we'll see which one we can come up with. I just pulled up the euro because I know a lot of people like to trade the euro, but any market can work. It's just I'm limited by my chart here. What they have, like for example, we don't have the Singapore yen on this charting package. So go ahead and type in a market that you would like to see. Pound. Yen, loonie, okay. Well, we can probably use all 3 of them. So, number 1, this is for the pound. I'm going to start with the pound, I'll move to the yen, and then I'll go to the loonie. So let's say that I'm interested in trading let's say that I'm interested in finding the sweet spots on the chart, and I want to trade the daily pound chart. This is what I would do. I would first move, as you can see here, I've gone to the weekly, and when I go to the weekly, what I'm going to do is I'm going to see where the market has repeatedly reversed, right? Otherwise known as support and resistance zones on the chart. So here's how I do this. I go to my weekly chart, and then I go to the line chart. And this is what I'm looking for. I'm looking for a few different types of spots. I'm looking for the overall high, where the market went to an area and then reversed from there. I'm looking for an overall low. Looks like it's down here. So it's sort of an extreme high and extreme low. It might not be the all-time high or the all-time low, but I first settle on those spots. Then what I'll do is I'll start drawing these zones on the chart at those places where the market has repeatedly found both support and resistance. You can see you've got one right here where the market found resistance here, support here, resistance there, and then probably resistance here. I know the closing prices are lower, but I'm guessing the wicks probably made it up to here. Let's just double check that. Yep, there's a wick right there that tagged our zone. So that's how I will do this. And I strongly recommend, if you're new to naked trading, to first use the line chart and get used to drawing the line chart zones. It's going to help a lot because a lot of people get confused when they're looking at candles, and the line chart just kind of takes the noise out of the equation. Makes it much simpler to see where these reversals are. There's clearly going to be one somewhere in between these two zones, and I could probably draw, and probably one right here as well, between those two zones, so I could probably draw it right about there. All right, I'm going to keep going here, and I'm going to keep drawing in my zones. Again, I'm looking for, ideally, those zones that have touches from above, support, and below, resistance, right? And that one right there, you can see this one at 162.55 has both. So for some of you, this is going to be a revelation. For others, this is going to be at. But this is always the first step. Now, here's where people go. Here's where traders go wrong. This is where they mess up, essentially. Is and I've done this, where you've got this zone. It's a really strong zone on the chart. Okay, and you know it's a strong zone on the chart. So you're getting ready to pull the trigger and take a trade. Here's where traders go wrong. They go wrong when they assume that the market has to reverse there. And that simply is not the case, is it? Because sometimes the market will go to a zone and it'll blow right through it. So how do we know when the market's going to go to a zone and reverse or versus break out and go beyond the zone? Well, first I'm going to go to the higher time frame, which is one higher up than I'm going to trade. So I've gone to the weekly, and I've drawn in all my weekly zones. Now I'm going to go down to my daily chart. I'm basically going to make sure that I didn't miss anything. So I'll extend it out like this. I'm going to go, okay, well, there's probably going to be one in here that I missed, right about there. You can see that on the line chart. Again, the line chart really smooths it out for you. And it looks like there might be one in this area here that I missed. Looks like there's one right about here. Ideally, I would get most of them on the higher time frame chart, in this case, which is the weekly chart, of course, ideally. But sometimes, of course, I'm going to miss them. Boom. And there's one back here as well that's probably not going to come into focus anytime soon, but it's good to have it on the chart. So there you go. That is my naked chart for the pound daily chart. Okay? So now the question is, how do I know if the market, when it gets to one of these zones, it's going to reverse versus break out? So the number one thing we need to do is go to the higher time frame and draw your zones. That's number one, right? I said I'd give you a checklist, and here is number one. Go one up, so to a higher time frame, and draw zones. So that's number one. Go one up to a higher time frame and draw zones. So if you're trading the 4-hour charts, you would go to the daily charts and draw your zones. If you're trading the 1-hour charts, you would go to the 4-hour charts and draw your zones. You always have to go back down and clean it up a bit when you get to your chart, but the main thing is to make sure that you've got the right the right zones drawn in so that you know those sweet spots. And here's the key. You don't really want to do anything unless the market is on the zone. So as you can see here on the pound, what's happened here on the pound is that the market has recently touched the 49.40 level. And it's come back up, and it's just barely reached the next zone, which is the 51.70 level, right? So it's kind of just right now breaking through one of the zones. And it looks like it's moving up to the next level, which is at 53.86. All right. So that's basically the first thing. Would you adjust the zones on the daily time frame after? Yeah, you can definitely do that, trend trader. That's actually a good point. And here's really the only reason why you would do that, because the closing prices on your weeklies are just slightly different from the touches that you get on the daily. So for example, on this one right here, see how I've drawn one at 57.21? I might just shift it up here just to contain these candles, and I might move it from 57.21 25 pips up to 57.46. And usually that's the kind of shift you get, and not much different than that. And same thing with this one here at 59.68. Maybe I move it down to like 59.50 or something like that to kind of, capture this touch and this touch more cleanly. You know what I mean? So the support here and the resistance there. But that's really all ideally they're going to line up, but I know that sometimes they don't. Like here, this is kind of a messy one here, because you can see that these are kind of like the market kind of did these false breakthroughs. And it's okay if it does false breakthroughs, but maybe I want to adjust it slightly and go, well, you know what? Actually, it looks more like this. That way I can capture all of these three touches, this touch, this is a false breakout, there's a touch, and then I probably got a really nice touch right here too on this little jig up, right? Let me see. Yeah. So that might make sense too, just to adjust that slightly up. So I do actually adjust them. That I really try not to do a lot. I don't want, it's like on a daily chart, I wouldn't want to move it like 80 pips or anything. It should really be in that 25 to 35 pip range max. Maybe 40 pips max. It's going to depend. In the pound, it might be a 30 pip adjustment, whereas on the pound Aussie, it might be a 65 pip adjustment, because the pound Aussie is so much more volatile than the pound. So it depends. But yeah, so great question. All right, let's keep going. Now, what I want to do next is... Okay, cool. What I want to do next is talk about... Okay, so one of the big mistakes I said people make when they're using support and resistance is they assume the market has to respect that area when it gets there, okay? And that's not the case, and I actually don't expect that. What I expect when the market gets to a zone is that I have an opportunity, okay? Most of the time when the market gets to a zone, I have no trade. Sometimes when the market gets to the zone, I'm going to expect a breakout. And sometimes when the market gets to a zone, I'm going to expect a reversal. Now, I'm going to show you how I determine which sort of move is a breakout versus a reversal, okay? Most traders here, and this is, I know from testing traders around the world extensively, most of the traders that I've come across are looking for reversals. There are very few traders that are looking for breakouts. More traders are likely to see a strong move and expect the market to move, or not expect it to reverse, but they want to catch that reversal. That's probably a better way of wording it. So most of you here are going to be more comfortable trading reversals. Does that mean that some of you are happy to trade, sort of trend continuation or breakout trades? Of course. Yes, of course. But psychologically, it makes sense to more traders to find those reversals. I'm not saying it's the best way to trade. I'm just saying it's the most comfortable way to trade for many traders. All right. So now what I want to do is go to the next trade. The other pair that people were asking for was the Canadian dollar and the yen. So we will look at both of those. I'm just going to put this one down here because it's an example chart. So we'll go ahead and actually, you know what? I'm not going to draw the zones in. I've got my Canadian dollar right here. Have you read this book? It's a really good book, Reminiscences of a Stock Operator, right? Great book if you haven't read it. A lot of really sound advice in there. It's a thinly veiled autobiography. All right, so this is an old trade that I took, and if you guys follow my trades, you know all about this one. This was a weekly setup, and we were basically looking at. Actually, This is a really good example. We were basically looking at this. I'm going to hit the F12 key, and I'm going to advance the charts one candle at a time until we get to where we saw the trade set up. Okay, so this was a trade set up off of this candle right here. All right, so you can see the high on this weekly is a weekly chart trade. I do often trade the weekly charts. I know a lot of people think that's crazy, but there's so many advantages to trading the weekly charts. It's amazing, really. And a lot of people say, well, I can't trade the weekly charts. My account's too small. And really the remedy for that is to simply find a broker that allows you to trade lot sizes that are, that you can adjust rather than lot sizes that they determine. So you determine that you're going to trade, 7 euro cents per lot or per pip or something like that. And those brokers are out there. So what we saw here was a really bullish candle, and then we saw this neutral candle. But this neutral candle was right up against a zone. So what I was expecting based on this bullish candle, well, first of all, remember the market was headed toward this level right here, and we would have expected some resistance, but it actually blew right through it and then settled on top of it. So it blew through this area that would have been resistance and actually found support for several weeks, several months, in fact. And then it gave us this really strong bounce. And the critical piece was this one right here, which was the pattern. This pattern is sort of a breakout pattern. It's the bullish candle, really big, strong bullish candle, followed by a neutral candle. Now, ideally, this candle wouldn't have gone as low as it did. It ideally would have had a higher low. And, it would have been slightly better if the candle was inside of this big blue candle, this big bullish candle as well. But in this case, the candle went a little bit higher than the big bullish candle, and it went a little bit lower than I would have liked, but it still fit the pattern, and it still was right up against our level here at 1490. You see this blue number here? That was my buy entry. That was my buy price. And my stop loss was not originally at 1550, of course. It was originally down here below the big blue candle, and it was moved up here after the market started to move into profit for this trade. So you can see it went up. It hit the first green number, which is 1820, 1.1820. That was target number one, and then target number two we just hit last week at 1.24. So it was a great trade, and it happened rather quickly. I wasn't expecting it to happen, in 2 months. You can see it went 1 month to target, or 5 weeks to target one, and then 2 weeks to two or three more weeks, depending on how you count it, to target two. So it actually went from here to here rather quickly. And one of my students actually pointed this trade out for us in one of the free webinars. So it was really cool that we found it. All right, but here's what I want to drive home for you. This trade's over. We can't really do anything about it, but what we can do is look at principle number 2. And principle number 2, when we're trading off support resistance, is this. Watch, whoops. No, it's a secret. Number 2 is watch for repeatable patterns at these zones. So we've already gone over how to draw the zones. Now what you want is a repeatable pattern at these zones. The best way I know to find a repeatable pattern, I've listed them, of course, in my book, and we talk about them in these webinars. I just showed you one right now. But the best way to get these into your head and to become comfortable with them is to test them. And you can test them with a MetaTrader account, just advancing the candles one at a time by hitting the F12 key, or you can test by getting Forex Tester, right? Which is probably the better way. But essentially, you want to test these patterns, find the patterns you're comfortable with, see the ones that you can trade well, and that you have a positive expectancy trading, and then get really, really good at it, right? And most traders can get really, really good at one pattern, over the course of several months. So it's not that difficult. So the repeatable pattern in this case was a breakout pattern, a bullish candle up against resistance, and then a little neutral candle right on the top of that bullish candle. Of course, you can go both ways. You can have a really bearish candle followed by a little neutral candle and see it go lower than a support level, but in this case, it was breaking through a resistance level, right? So where traders go wrong is they see the market go to a zone and they expect it to reverse. So for example, right now we're at this 24 zone, right? Or 1.2420, I have it on my chart. And my, I have it at 1.2418, but we could call it 1.2420. And last week we actually went as high as 1.2456. So it went a little bit higher, but look where it closed. Isn't that interesting? It closed at 1.2417, and you can't make this stuff up. I had this zone drawn at 1.2418, and the closing price last. And you can ask anyone who follows my trades. This zone was actually drawn on here literally months and months and months before the market closed on it last week. It's pretty amazing that the market has a memory like this, right? But that's exactly what happens. So now that the market's up here, okay, people are gonna. Well, I'll show you why I drew a zone here. Let me zoom back so you can see where the zone is, because it was a long time coming. It's right here, guys, on the line chart. It looks a little bit ugly here, but you'll see it on the line chart. It's because you can see. I'm gonna actually make it a different color so it's easier to follow. I'm gonna make it. I'll go ahead and make it blue for you. But essentially, you can see there's support here, there's resistance, there was resistance back here, there was support, and there was resistance back here. This is back in 2008, right? If you go back, you'll probably see some even more. I can't go back far enough, but so that's why this zone was drawn there, right? And the market, amazingly enough, from the touches, the last time it touched it really and respected it was back in 2008, actually 2009, January 2009. So yes, it actually remembered 6 years later to respect that level. Now, again, the point is, now that we're at this zone, we have to wait for a repeatable pattern. We have to see something that tells us, that gives us a clue. Well, I'll tell you right now, there isn't really anything about this that says reversal. A lot of traders are going to look at this and go, oh, okay, it's time to sell here because it's a zone. Well, not really. I mean, it's first got to give me a repeatable pattern, a catalyst, if you will, a reason to sell off this zone. Otherwise, we have to wait and see. Most of the time, I do a lot of waiting and seeing. Occasionally, I'll get a breakout pattern or a reversal pattern, and that way I can trade the breakout or the reversal. But really what we're looking at here, guys, is just a very strong move up to a support and resistance level, and now we're sort of undecided. So we don't have a repeatable pattern here, so it's a no trade situation. Now what happens if the week, which is young, if the week that is very young ends up printing a candle like this? That would be considered a lot like the one back here, right? Which is essentially a bullish candle followed by a small little trend continuation candle, right? So we'd expect the market to move up to the next level up here, which is my next zone up here is 2790, right? It's actually 28, but if I had a profit target, it'd be 2790 because that would be 10 pips lower. And I like to, make sure that I get cashed out. I'm not saying that I'm going to take a trade. I'm just saying if we get a candle that looks like this on Friday and it closes like this, that would in fact be a trend continuation setup. Can you guys hear me okay? There's some questions about the sound. Sound is okay. Okay, all right, thank you. Thank you. A leak, it may be your internet connection, I'm not sure. Okay, cool. So that was number 2, was basically watching. So number 1 is we find support and resistance areas. And the only exceptions are those areas at extreme highs and lows. The line chart will help you with that. Number 2 is, watch for reversal formations at these spots. Most traders are looking for reversals. But you can't just wait for the market to go to a zone and expect it to reverse. You actually need that reversal pattern that's repeatable, that's testable, that you've convinced yourself you're good at trading, essentially. And a Forex tester is the way to do that. Number three is we pay it. Now, this is critical, and this is where I think we're going to move into the third market here, which was the yen. Thank you, Yurchenko. Evgeny Yurchenko is saying, what about the yen? So the yen is giving us number three, which is pay attention to the frequency and the number of touches. I'm going to write that up here on the board here so you get all three of the checklists here. Frequency and number of touches. This is absolutely critical, and it's sort of the forgotten art of support and resistance trading. Some people know how to draw zones quite well, and they know what they look like. They know how to find them. Some people know how to find catalysts, and they know how to trade them. But this is the one thing that people miss out on, and it's really the clue that tells you what's likely to happen. And if I'm looking at this chart right here, and I know this isn't technically, this chart isn't, horizontal support and resistance. I've got these sort of trend lines here, which are, I find a lot of fault in trend lines because I think that everyone draws them differently. But you could also make the case that, there's a support and resistance level right here. In fact, I would probably make that case that the 118.70 level is a pretty darn good support resistance level in and of itself. And that's basically what we've been bouncing off of. So whether you call it the trend line here or the horizontal level, this is basically what we've been bouncing off of, okay? So the principle remains true, whether or not you're using a sloped support and resistance level like a trend line or a flat horizontal one. Now, why do I pay attention to the frequency of touches on a zone and the number of touches on a zone? The reason is the frequency and number of touches provides you a clue. It's not foolproof, but it provides you a clue about what the market wants to do. Now, I'll tell you right now, this market, the dollar yen, has gone up one day, down the next. Up, down, up, down. So we would expect it to go up again today, right? If the market is doing what it's doing right here, which is essentially it spent the last 6 trading days butting up against this zone, whether or not you call it the trend line zone in the sort of flag formation here or the horizontal zone. The market's repeatedly hit this, and it's happened in what I call quick succession. Quick succession is just another way of saying it's happening over and over again, one right after the other. Now, it doesn't have to be every candle in a row like it is here, but this is quite obvious, isn't it? It makes it very, very obvious what's going on here. The market is testing and retesting this level, and it's acting like it wants to break through it. If the market had come to this level, touched it once, and then moved away from it, that would have the hallmark of a reversal. But because the market's come up and it's made, remember, frequency, we've had many touches. All of the last daily candles for the last 6 days have touched this level. That's a lot of frequency. And the number of touches, we've seen 6 touches, right? 6 touches and counting. So this has definitely got high frequency because every single candle of, in recent history has hit it. And the number, we've had 6 touches. Now, I'll give you a short and dirty rule. It's not foolproof, but what I like to use is a rule where, like, if you have 2 touches, look for a reversal. But as soon as you get, 1 or 2 touches could mean a reversal, but 3 or more could mean a breakout. That's the way I do it. So, for example, right here, see how the market came to this level? Now, I don't even know if this is a zone or not, but let's just say that it is, where I've got my shaded box drawn down here on the line chart. Look how the line chart shows me it made 2 touches there, right? So those 2 touches, the market hit it, pulled away, hit it again, and then fell, right? So that is a classic reversal pattern, double top, double bottom. We all heard of that. But the reason why it's so powerful is it fits into our checklist here, because the frequency of touches, how many touches do we have? We basically had two, right? Two touches. And they didn't happen right after another. So there's the number is two, and how frequently did it happen? I mean, was it in quick succession, or did they touch and then move away? The market hit it, it moved away, and then it hit it again, and then it couldn't break through. And that shows up on the line chart, right? So if you got high frequency, they're one right after another, rapid fire like over here, that's highly likely to be a breakout. Now the safest way to wait for that breakout is to see the market close above this level and then trade up here, come back down, bounce with a really strong bullish candle, and then I get in off that bounce, right? And I'll show you an example of that when I see the market break through a level, break higher, trade higher, come back down and bounce. I'll show you an example of what I'm talking about right here on gold. So this is what gold's done, right? Let's take a look at what happened on this gold chart. I've got a pending trade ready to fire on this one. So you can see here, the market broke through the 1273 level. Why is it so important? Well, we had support, 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 resistance, support, resistance, broke through, came back down, touched it. You'll see that on the line chart. Look at that little jig right there. Boom, it jigged right off of it. Bam, goes right back up. What happens next? I'm going to hit the F12 key to find out. Goes up to the next zone, magically, finds resistance where there was previous support, right? Comes back down, all the way down to our zone at 1273. And then yesterday, it gives us a bullish candle, which looks suspiciously like a bounce, right? So that's why I'm interested in taking a buy off this trade, off this pair today, off this market, I should say, today, which is gold, US dollars. We're above yesterday's high. So that's an example of what I'm talking about here, right? Now, some traders would have been caught, right? Some traders would have seen the market go up here, and they said, wow, the markets were, there was previous support here, and here, and here, and they would have said, okay, I need to sell. And, of course, they would have been blasted because the market even went higher, right? It went all the way up to the next zone. So that's why it's important to have, all of your rules sort of in alignment. You need to find really solid support resistance levels, and then you wait for reversal formations, and you also pay attention to the number of touches and whether or not they're in quick succession, right? Whether or not they're in quick succession. So you can see here, this over here is an example, if I go to the line chart, of two touches. Market fell through this level, came back up, touched it once, touched it twice, and then fell, right? Quality turned down. Let me just make sure, guys, that my I got the mic. Okay, cool. Is the voice okay, guys? Is my voice coming through? Because people are... The sound suddenly went muffled. Okay, cool. All right. It's okay. It's muffled. Okay with me, okay? All right. Okay, cool. All right, so I want to open it up to questions, guys. If you have any... The quality is lower, but we can understand what you're saying. Okay. Well, hopefully the recording will be all right. That's really weird. I don't know what to tell you. I've just checked to make sure that the right microphone is on, and I believe it is. I'll speak slow. Okay. Okay. So those are basically the rules. I'll just do a quick recap, and you can fire off any markets that you would like to look at from a naked perspective. So the first chart we were looking at was the pound, I believe. Was it the pound? Oh, yeah, it was the pound, but it's down here. So the first rule is go a higher time frame up and draw some support and resistance level zones, and then go down to your time frame that you're trading off of, right? You have exceptions. You don't have to have support and resistance at every level because, of course, the all-time highs and the all-time lows will also qualify as zones. You just don't know when the market's going to get back there. Next, number 2, which we were talking about, I think, on the Canadian dollar chart, which was once the market gets to these zones, we're looking for repeatable patterns at these zones. It's not enough for the market to get to a zone and then say, we're going to say, okay, that's it, the market's going to reverse. It's not enough to do that. Instead, what we do is once the market reaches one of these zones, we say to ourselves, self, has it printed a repeatable pattern that I can hang my hat on? Is there a catalyst? Is there something that tells me that the market is getting ready to reverse here? Or is there something that tells me that it's getting ready to break through? Usually, there isn't anything. But occasionally, we have a breakout pattern that says the market's going to bust through. And I'll show you in a moment, actually, a really quick and dirty way to tell whether or not you're in a strong trend that's related to this rule. But usually, when the market hits a level, you don't get either. So when the market hit this 1820 level, we really didn't get anything that told us whether it was going to reverse or keep going. We really didn't at all. In this case, it kept going, but there wasn't really anything about these candles, these 3 candles here, that would tell us that it's going to keep going. It wasn't really a breakout formation, and there really wasn't a reversal either. So we watch for these repeatable patterns, and of course you want to test these patterns, get really good at identifying them and managing them. And then finally, the third thing that we were talking about here is the, whoa, what happened there? Is the number of touches and how frequent are they? Are they happening one after the next after the next? Is it just 2 touches? Is it just 1 touch? Or is it 3, 4, 5, 6 touches? Because we know when we get several touches in quick succession, one right after the next, that's not always, but usually, not always, but often the sign of a breakout. And I would be very keen to wait for a dollar-yen breakout at this level, given what the market's been doing lately. It may even pull back a little bit and then make a really strong run back up here and go. But I wouldn't be interested in a sell based on what this is doing. Even if it were to fall, I don't think it would fall much further than 115.30, before making another run back up. So to me, this is definitely the type of market that suggests an upward move in the near future, not a downward move, not a really strong downward move. All right, so maybe there is something between you and the mic. Yeah, it's really weird. I don't know. There's like a screen, like a pop screen. Carlos H. would like to see the Swissy. This is a very interesting chart. Of course, because of the news last week and so forth. But I don't really want to look at this candle right here. Sure, you could pull a fib grid or whatever, but I think it makes more sense to just go back on the chart. First of all, let's go to the weekly chart, and let's go and draw our zones in on the weekly chart so that I can take a look at the daily. And this is just going to take a few moments to do this. And then I'll have all of my zones locked in here. This is a really hard one to do because it's been trending so much. So, it's a really tough one to draw zones on. Really tough. I like the markets that are a little bit more range bound because you get more touches as support and resistance, whereas this has been essentially in a strong downtrend for the last 15 years. So it's pretty tough. Okay. Got one there. Got one there. Got one there. We got a low down there. And there. And finally, right there. So that would be where I would draw my zones. And then I would go to the daily. Just make sure I'm not missing anything here. See what's going on. It looks like there's probably one somewhere in here. I go to the daily. Probably going to see one about what? About there. And then I'm also going to see one up here. Probably about there. See what else. There's also going to be one in this area here. Looks like. All right. So now the reason why I've gone through all this is to identify where the pullback may end up on the Swissy. Remember, we're going to use all the same rules we talked about, but I just want to see where it's likely to give us a possible sell signal. And I would definitely be looking for a sell signal, not a buy. All right, so let's see. Okay, well, you can see, actually you can see quite clearly that it just hit a zone yesterday, didn't it? All right, let's take a look at this one. So yesterday it hit a zone right here, and well, 2 days ago it hit a zone, and then yesterday it printed sort of this neutral candle. This is not a reversal candle, but it's a neutral candle, and it's right on this zone. Now, I'm assuming if you pull a fib grid, you're going to see some sort of what is it? It's about 38.2, isn't it? Yeah. So it's about 38.2. The 50% retracement also lines up with the zone, and so does the 61.8. Isn't that fascinating? So any one of these spots would be a good spot to me for a possible sell if you are interested in selling the dollar Swissy. But, you know, the pattern that it has right here is not really one that I would hang my hat on. Here's with one exception. If we were to get a really strong lower close today, then what we would see see how that line chart. Actually, let me change it so it's a different color for you, like green. Okay. See how the line. Let me zoom in too. See how the line chart it's just kind of flat? Here's what would change everything for me. If we had a really low close on this current candle, and it closed all the way down here, what you would see, like, let's say that today's daily candle on the Swissy closes at 89.03, okay? What that would mean is you would see a really sharp turn, and this line that's currently kind of just flat here right on the zone would point really strongly down, and that would be enough for me to be keen on a sell, right? That would do it. That would definitely do it. But, you know, it'd have to be a really red candle, a really bearish candle that, you know, on today's close. And if that happened, I would put my sell order below the low of either the bearish candle today or the low of tomorrow's agent session, whichever is lower. So in other words, if tomorrow the agent session actually took out today's low and went lower, I would put my sell order 6 pips below that. But if today's low was the lowest low and the agent session just drifted a little bit higher, then I would just put my sell order 6 pips below the daily low of today's daily candle if it ends up being a really big red candle. Hopefully that makes sense. Stop loss would go up above the high of this candle, assuming it's the highest high of the two candles, which it probably would be if we got a big bearish candle.
So that would be a stop up at 91.67 or something like that. Okay? So that would be how I would trade that one. Who had that one? That was a really good one. Carlos, cool. Black swan pattern. Yep. Cool. Euro-Swiss chart might give the clue. Yep. All right. Any other charts that you guys would like to take a look at? So that is essentially the Savisi. I can show you a couple of the charts that I'm watching if you guys are interested. Ooh, awesome. This candle not long ago was actually really bullish, and now it's pulling back. So, yeah, Aussie yen. Hey, trend trader, that's the one I'm looking at. So I've got a sell order on the Aussie yen at 92.10. My stop loss is up here at 94.70, and I'm targeting 89.70 and 87.60. So that is my Aussie yen trade. What might force me to rethink this or remove my sell order down here? Now, why is it at 92.10? Well, you'll see the low here is at 92.16, so it's simply 6 pips lower than the low of this candle. What I expected to happen, and those of you that watch my trades and follow my trades know that I was hoping that yesterday's candle would not close above this zone, and it didn't, and that today's candle, if anything, would just maybe touch this trend line and surely close below this zone. As long as it does that, we'll see a strong a bend in the line chart, and that means that the market's starting to think about taking out that low down here that it made earlier in the week. I think this was Monday's candle, right? Yeah. So that's basically how I'm managing this trade. If the market closes above 94.03, or if it closes above this trend line, or 94.3 or higher on a daily candle, then I'll remove my order because it's not really lining up with what I expect. Because I expected the market to move up, tag the trend line or the zone, and then start to fall again. And you can see I've got my targets at 89.70 and 87.60. So that is my Aussie yen. Oh, Joe, good question. A. Joe says, what about the trend? Do we use trend in any way in the checklist? Right. Let me talk about that, because here's what you're going to see in a strong trend. I know I mentioned this earlier, but I didn't follow up, did I? So when you have a strong trend, you'll see multiple reversal signals fail, right? So let me show you what I mean. Here's a reversal signal right here. This is what's known as a kangaroo tail right here. I knew there was one. And the market did trade higher the next candle, and it came back down and took out the low, which would have stopped you out. So there's one, right? Here is another reversal candle right here. Now, I'm not saying that these are really good ones. This red candle is better than this blue one, believe it or not. But here's another one. Kangaroo tail, market moves up, then boom, starts falling, takes out the low of the candle, the loser. Here's another one. The market gives us a bullish kangaroo tail right here. I'm not saying that it's ideal because it actually hung a little bit lower than the bounce right here. But again, market trades higher, puts a competing kangaroo tail, and then falls through the floor again. And I think, well, I suppose you could also make the case for this being one right here. Technically it is. It's not a very good one, but it is. And the reason why it's not a very good one because it doesn't have space or room to the left. And you can see how the market went up, boom, fell, so forth. So, yeah, so a lot about this chart tells us that the market's in a trend. How do we know it's in a trend? Because the counter trend signals are getting completely waxed off the chart. This one gets waxed, that one gets waxed, that one gets waxed, and then finally this one, gets waxed as well. So when you start seeing these reversal candles fail, you've got a pretty good idea that you're in a strong trend. So what would I do in that case? Well, we'll do other webinars on trend trading. There's a whole structure to the trend, and it varies depending on the trend in the market. But essentially what we're trying to do here is time our entries. and I'm trying to time an entry here on the Aussie dollar. I'd love to see it get up to 80.75 and print a bearish candle. That would be a well-placed and well-timed place to sell right there. But we'll see. We'll see if it happens. Okay, Euro Swiss. Okay, so Euro Swiss, very similar to the Swissy, I guess, in some ways. I wouldn't, on this one, you're going to have to just do what you did on a Swissy. Go back and see if you can find. I mean, I don't think my chart goes back far enough. Remember, the euro only really came into existence in 2001, right? So this is kind of like a synthetic euro. I would just use a fib when it's this kind of when you're looking at uncharted territory. Usually, a fib is a pretty good indicator of how far it's going to go, right? So you really don't have support and resistance. I use fibs or fib extensions when I don't have zones. No problem, Joe. The Aussie yen, we talked about that. The yen, we also talked about that chart. So if you missed that DZ Vista, you can definitely check that out on the recording, right? Because we spent a lot of time on the yen. Yeah. All right, cool. No probs. Thanks so much for your time, guys. I really appreciate it. I wish you happy trading. I hope you have a wonderful trading week. And we will see you in the next webinar, in the next Naked Trading webinar. Thanks so much for your time. I really appreciate it. I know we all have busy lives, and I'm glad that you were able to make the time. And thanks to those of you watching the recording. Thanks, guys. Happy trading, and we'll see you next time. Thank you. Thanks, Darius. Bye, Pell. See you, Robert. Take care, Alexander. Bye, Denise. Bye, Renee. Take care. Bye, Carl. See ya.